The JSE is firmer with its global peers, mixed as investors awaited fresh catalysts. The index rose more than 1%, reversing yesterday's losses, partly due to expectations of monetary easing from the Federal Reserve and news of potential support from Chinese authorities to stabilise domestic stock markets. Michael Treherne, portfolio manager at Vestact, joins us now for an overview of the latest market moves. Michael, a very good afternoon to you. Welcome to Newzroom Afrika. The rand seems to be stabilising against the dollar so far today. What's driving those moves?
Good afternoon, Paul. Sure, yeah, the rand is looking a bit stronger than it was earlier today, but we're still above that 19 level, and that's not great. In general, the global markets are feeling very positive, very bullish, and the global markets are doing well. The rand generally strengthens as we say it's a risk-on environment. So investors are happy to take on a bit more risk associated with South African assets, and then that drives the rand stronger.
Gold is up on a weaker dollar, while oil loses ground in afternoon trade. Perhaps give us an overview of what's driving moves in that space.
Yeah, gold just seems to be bumbling along, getting its cues from what the dollar's doing. I think more importantly, oil prices were up over 2% yesterday evening, and that is as Ukraine struck some crucial infrastructure in Russia related to their oil exports. And if Russia is not able to export as much oil as it has been, it creates an increase in demand and prices go up. Not helping the demand and supply equation is the US has got some extreme winter weather at the moment, and that's hampering some of their demand, some of their supply and their oil wells in the US. So oil up slightly, but at least it's not much above $80.
And on the other end, AVR's trading statement for the 6 months ended the 31st of December 2023 is out. What do those numbers look like?
Yeah, the market is very happy with those numbers. AVR currently trading up 7%. Overall, they did well. The only blemish on their numbers was from I&J, and they reported that they were struggling with fish catcheries or fish catches in terms of volumes, and then they were also struggling with exports due to issues at the Cape Town harbour at the end of the year. So that was the only blemish really on their numbers, but in general, they showed how strong their brand portfolio is and how they're able to push increased inflation prices onto customers, and customers were happy to pay the higher prices.
Clicks has also published a trading update for 20 weeks. Perhaps help us make sense of that performance.
Yeah, that stock's also up 1%. They announced that the week before Christmas was a record week for the group. So that's good to see, and even though we under current economic pressure, people are still willing to spend. I think the number that you really want to look at is how do they compare this year versus last year in existing stores. And existing stores saw sales up 8.5%, which is higher than the inflation that they saw of 7.5%. So that's moving in the correct direction. And it's also worth noting that they bought Sorbet last year. And they say that Sorbet under their control is up 12% compared to last year. So all in all, metrics pointing in the correct direction.
Very well. Let me thank you for your time. Michael Treherne, portfolio manager at Vestact, joining us for the overview of the latest market updates. Thanks for that analysis.